What you are going to watch can change your life. These are the best 8 investment tips given by the legendary investor and billionaire Warren Buffett on his 87th birthday. Diversification is not always a good idea. According to Buffett, diversity is best left to novice investors. A seasoned investor should choose stocks with the long term in mind and have confidence in his or her purchases. Buffett waits for opportunities to buy good stocks, and when those opportunities come his way, he takes full advantage. According to Buffett, when it's raining gold, put out the bucket, not the thimble. Invest in yourself first. According to Warren Buffett, one's own skills are the best investment one can make. The stock market won't provide the majority of people's income. Their careers will allow them to succeed. Put yourself first, then. Trust yourself to be a successful investor. According to Buffett, having faith in your investment choices is the hardest thing. You constantly believe that you are mistaken and that everyone else is correct. Instead, you must study and have confidence in yourself. Make investments that you understand. According to Buffett, he must spend no more than 10 minutes understanding how a firm generates revenue as well as the key factors affecting its industry before investing in its stock. He moves on to evaluate another company using this standard if he can't comprehend it in 10 minutes. Make sure you choose the right news to focus on. One of Warren Buffett's best investment advices is to avoid placing too much stock in any one news headline. The 99-to-1 rule is something that Buffett supports. The majority of investors make their decisions on 1% of the financial news they read. Thus, anytime negative news is announced, for instance, that a company's revenues have decreased by 10%, they promptly sell their holdings. Buffett asserts that the company in this case will undoubtedly be able to weather such occurrences if it has been in operation for, say, 100 years. In other words, people frequently have a tendency to overreact. Buying a stock of a company is buying a part of a business. Consider purchasing a share in the neighborhood convenience shop. You'll automatically consider the competitors, suppliers, prices, etc. You'll need to consider the specific location, as well as its market competition. Similar to how business owners do it, you must consider all of these factors when purchasing stocks. You don't just buy a piece of paper or a ticker symbol when you purchase a stock. Purchasing a company's stock entitles you to ownership in the company. Learn from your mistakes and move on. You might be surprised to learn that even Warren Buffett makes mistakes, and big ones too. But he makes sure that he learns from his mistakes. Buffett suggests keeping track of your errors so that you may figure out what went wrong and avoid making the same ones again. Buffett continues by advising that you impart these lessons to your children and grandchildren so that they will be aware of the errors they should avoid making. Don't be a day trader. Buffett claims that buying a stock and putting it away for the long term is the key to obtaining a higher return on investment. He adheres to the buy and hold philosophy and insists on keeping equities for a very long time. There are 2 guiding ideas here. A stock's price will eventually equal its intrinsic value if you purchase it for less than it is really worth. If you purchase a fantastic company, its value will compound and grow dramatically the longer you hold onto it. So, the patient investor will ultimately be rewarded if they hold onto their stocks for a longer time. Time is a great business friend, in Buffett's opinion. According to him, continuously buying and selling stocks will reduce your earnings significantly due to trading commissions and taxes. Therefore, it is preferable to invest in top stocks and hold them for a long time. I hope you appreciated these Warren Buffett investment advices, which practically anyone can use to become a successful investor. Whether you're a novice investor or a seasoned investor, you may use these investment advice to improve your personal investments.